Hello. Welcome back. Opendoor Technology, and we're going to talk about news, this chart, and where we can go next. That's what everybody's here for, right? We all want to know where Opendoor price go to next. Will it go up? Will it go down? And will it consolidate? And for Opendoor, we got to look at the data and we got to look at interest rate cuts to know what's going to happen next. Here we go. All right, here are the data reports, and today is Wednesday, November 26th. Tomorrow is a holiday, so the market will be closed. So first we're going to look at the 8 o'clock data report, and we have a housing report right there. The 30-year mortgage rate went up a little bit, not by a lot, just a little bit. The mortgage applications went up a little bit too, so they kind of balance out each other. Mortgage rate went up a little bit, but mortgage applications also went up a little bit. So not too much news there. Opendoor is rated right now. Not too sure why. The market is looking decent overall, but maybe Opendoor is rated because they expected better numbers, like better mortgage application numbers, and possibly the mortgage rate to go down and not up. People are wondering why the mortgage rate is going up. Shouldn't it be going down? But that's just how it is right now. It did go up a little bit, but not by a lot. So that's good news for me. And the mortgage applications is up a tiny bit, but at least it's not down, right? So we got to look at the positive side. And we had initial jobless claims, durable goods, jobless claims for a week. And those data reports didn't do too much to the market. As you see, the market is looking nice and green for the most part. Here's another article I found about housing prices. The housing prices fall 2025 sees record home price cuts. So prices are lowering for houses. People may find some bargains on a house that they want to buy. Could that spark more buying interest? Possibly. Home sellers adjust prices, but most retain profits, creating more opportunities for patient buyers. As I said before, there's actually a lot of home buyers out there. They're just sitting on the sideline. There are a lot of people who are ready to upgrade from one house to another, or they're currently in an apartment, or they're currently renting a house. They want to buy a house, and they actually probably have some money to buy a house, but they're waiting for the interest rates cuts to go down. That's the issue. We're not saying that there's people out here who have no money to buy a house. There are people out here who have money to buy houses, but they're just waiting for the best deal. Zillow had a report. They said their recent data is showing some of the steepest price cuts in years. The typical U.S. listing saw a $25,000 price cut in October, while the standard or average price cuts are around $10,000. And why is that happening? Because some of these houses have been on the market for a long time, and if they want to sell their house, they're going to have to lower the prices, and that's why the prices are coming down to $25,000 or $10,000. And they're saying the longer this housing crisis lingers on, prices could come down even more, and that'll put more home buyers on the market. But we're not too worried about that. What we're worried about is interest rate cuts and how the company is going, because the interest rates ultimately tells us what's going to happen next for the housing market. And I do have some updates I'm going to share with you, and then we'll go to the charts. Opendoor stock surged 1,000% from mid-year lows, rising from 60 cents to $7.74. Former Shopify COO took over as the CEO September 2025. The CEO nearly doubled home purchase volume from mid-September to end of October. So that's good. We're starting to buy houses again. But at the same time, fewer homes were sold, down by 29%. And the new CEO aims to achieve net profitability by end of 2026 through AI tools, expense controls, and improved pricing technology. So most of you guys probably already know that. Might be just an update for you. But for people who don't know, that's a breakdown of what the CEO is trying to accomplish for next year. And remember, Opendoor had a lot of job cuts. It's going to save the company a lot of money in the long run. And the reason why? Because they're going with AI and automation. And the second positive is that CEO plans to decrease average time on market, shorter holding periods, cut costs, and improve profitability. He also wants to keep operating expenses flat while ramping up volume through automation. So a lot of automation is going to happen, and it's going to save Opendoor money. Company is using better pricing technology to improve margins. The CEO believes Opendoor can standardize processes and rely on more automation. This should allow volume growth without proportional expense increases. So that's what the CEO is trying to do, and that's how he plans to grow into profitability in 2026. And remember, we're looking forward to a housing boom sometime maybe mid 2026. If everything goes to plan, I think we could become profitable by the end of 2026 based on what he wants to do and also a housing boom. So here we are, the weekly chart, and as you can see, we're still looking good. We're still red. We're only down 10 cents, not too bad. We came up a little bit. We went pretty low, then we came up. And as you can see, we are right on the moving average on a weekly chart. The candlestick right here went down. Now here's the tail end of the candlestick right here. And it touched the moving average and it bounced right back up. And we're slowly coming up. We have higher lows, right? Higher lows starting from November 7th. And it's still there. Higher lows. 4 weeks straight in a row. Higher lows. So that's very good. And we have also higher highs. The high for November 7th was $7.19. And here's the line. I put it right here where the high was for November 7th. And as you can see, the following week was higher. The next week after that was slightly lower, but not too much. Then the week after that is higher than all the weeks previously. So we have higher highs and higher lows. So no matter what today's chart look like, we are still trending up on a weekly. And remember, if you're in this for the long run, you're looking at that weekly chart. And this is exactly what I mean right here by higher lows. And as you can see, we're trading right above the line I just drew from 486. And as you can see, this candlestick right here touched the line and then it came up again. So we are actually trading higher than the trend line. So what that means is that we are still in a positive trending movement going up. And the support on this chart, it shows that it's right about here, the 721. So even if we went down to the $7.20 today, which I don't think is going to happen, we would still be in an uptrend. So that's the support for Opendoor, $7.20, $7.21. So we're doing good. We're doing good. No matter what people are saying, oh, Opendoor is done, Opendoor is finished, we are still actually in an uptrend. And you can see the trend lines that I just drew in the chart. They're down here, which means that we're trading above the trend. So we're still looking good. The resistance for today is going to be right here at the 775. And then we're going to have another one at 792 once again. I keep saying 792 all the time, it seems like. So that's definitely going to be a huge resistance, 792, $8. Because every time I look at the chart, it's 792. So watch for 792. And then the 776 is going to be the intraday resistance. The intraday support is going to be right here at the 750 area. So that's where we're at right now on the hourly chart. We went below that support, and then the next hourly candle, we bounced up, and we're looking good. At the moment, we're looking good. We are actually in a nice uptrend for Opendoor on a daily. The RSI is moving upward at a nice little hook right here, right down here, then it hooked up, going straight up. MACD looks okay, not the greatest, but RSI looking good on the hourly chart, and that's always a good sign. So let's see what's going to happen. Can it break the 775 or 776? We're about 10 cents away from it. I don't know what's going to happen, but we do have a holiday tomorrow, so I don't know how much volume we're going to get. But that would be a good day if we close above the resistance at 775. If we can close above 775 and hold it, that's actually going to be a bullish day. Even though we came down a lot, right, from open, but we bounced up. Right now, I would say we're about, in the middle. 50-50, not a good day, not a bad day for the intraday level. Overall, weekly, daily, we're looking good. But for the intraday, today's chart only, we're about average, right in the middle. And real quick on the daily chart, as I said before, we're looking decent on an uptrend. We have 3 green candles and then a red candle for today. But hopefully we recover some price for Opendoor before the market close. I see we are having some buying pressure right here. Now we're at $7.70. But I want to show you the daily chart real quick. We have 3 green candles here and then 1 red candle because of today. Hopefully we recover some and make that red candle just a bit smaller. But I do want to show you lennar chart. I've been saying this for the past few videos. Lennar and Open are somewhat related because they're in the same sector, same housing sector. And lennar looking great. We have 1, 2, 3, 4, 5 green candles in a row. 5 days of green candles for lennar. And we're not talking about regular candles. These candles are pretty huge. We have a big one right here, and another huge candlestick right here. So something is going on for the housing market, especially for lennar. Now, we want that to spill over to Opendoor, and I think it will at some point later on down the road, because when the stock goes up, it's for a reason. We don't know right now why it's going up. I know we have some big investors coming into lennar. I think Warren Buffett bought some shares, but why is he buying shares? For a reason, right? Warren Buffett don't buy stocks for no reason. A lot of times he buys stocks before it actually goes up, and that's why he could be buying shares of lennar, because he see that a housing recovery could be in the works for 2026. And if that's true, Opendoor should also recover, because if the housing markets recover, lennar goes up, Opendoor goes up, and all the other housing stocks go up. And Opendoor is a housing stock, so we all go up together, right? All right, everybody. Thanks for watching. Have a great holiday. Don't forget to subscribe, like, and comment. I'll see you after the holiday on Friday. Take care.